We've got Abdellah Majd here. We're getting Hamilton. We're getting Grimsby. We're talking businesses. We're talking rental rates.
You can see 1 bedrooms are down 6%, 2 bedrooms are down 5%, 3 bedrooms are up a smidge. There's a bit of a shift there where these larger leases are becoming a little bit more important.
You can see just on this one photo that if you just went in there and did like $10,000 of sprucing it up, it would look like a totally different place. And you could carry on that business in for the next 25 years. Within like literally 6 years or less, you just have a cash flowing business that's printing you 150 to 200 grand a year. Welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, your host. Today I've got a sore throat, but it ain't gonna stop nothing because we've got Abdellah Majd here. We're getting Hamilton, we're getting Grimsby, we're talking businesses, we're talking rental rates. We're talking about a lot of real estate stuff today, so make sure you stay tuned for the whole video because Abdellah always blows our minds and brings us great deals. Abdellah, what's going on, buddy?
Adam, how are you, brother? Good, man.
Good.
Excited to jump back in here again. Always do our best from our end to bring some deals, some case studies, and like you said, going to mix it up a little bit today. Again, we were kind of talking behind the scenes here, but what I've noticed, as kind of like just an identifier here with some real estate investors and actually more experienced real estate investors who maybe have some projects on hold or whatnot, and kind of waiting for this market to calibrate, so to speak, however that looks like to certain people. I've had a lot of discussions about investors looking at, high profiting businesses, right? And long-standing businesses. So we're going to bring you one today. Again, long-standing business, 15 years, high traffic area on the West Hamilton Mountain in a very mature retail kind of pocket. So again, we're always trying to take different angles. Hopefully, the viewers enjoy what they see.
Yeah, I can't wait, man. I'm excited to talk about the numbers again too, because that stats update you gave us, it looks like prime time buying season. And I can't wait for us to get roasted in the comments because there's going to be somebody salty about the price. But listen to me, the stats you showed us on the market update video just screamed to me opportunity, right? You got inventory way up, you got price coming down, you got average days on market sitting, which is not great if you're trying to sell something right now, and especially if you're trying to sell it at an inappropriate price, but it's fantastic if you're a buyer. And if you're a real estate investor, and that's probably who you are watching this channel, this is buying season, man.
100%. Couldn't agree more. I mean, that's across the board. Again, it's, depending what your goals are, if you're on the buying side, the selling side, but if we're going to just kind of shift our focus, there's really nothing else that we can present or talk about or highlight. It is absolutely buying season until, even with the rates in a free fall, which, we're all enjoying to some degree, right? Really depending on your position. But I honestly, I'm, not one to harp on any which way in the real estate market, but we haven't seen something like this in the longest of times with, again, like you said, days on market, inventory sky high, months of supply. If you're looking to get into the market, it doesn't matter what you're looking to do. Get active, jump off the sidelines and take some action for sure.
Well, just start making offers. Like, this is the whole thing. Like, when inventory's sitting, offers are the way that you win, right? That's the only solution. That's the only way out is through. And what people need to understand is there's a bullwhip effect on both sides. So when the interest rates go up, there's a bullwhip effect where it takes a long time for that whip to really crack.
Exactly.
And it's the same thing again now on the inverse, where right now you're enjoying much lower rates, but the prices haven't actually compensated yet for those rates because the prices move a lot slower than the rate drop itself.
Exactly.
So this is really good opportunity. And again, with real estate investing, we're always zooming out. We cannot look at a month to month, set of stats. Like, the reason why we do that on the channel is to be able to track this over time. But again, what we really want to do is zoom out, right? Look at 10 years data, look at 20 years data, look at 5 even, and just see where we're at in the market and just understand that this is probably one of the best opportunities you'll have as the rate's dropping far faster than the price can respond to.
Yeah, 100%. Yeah, I love that comment too, Adam, about the bullwhip effect. Couldn't agree more. Obviously, being boots on the ground and living and breathing this stuff on a daily basis, and it's the speed at which the rates are dropping, right? Like being in the industry, and obviously knowing your stuff as well. Like this is something that's just natural, right? You kind of have to expect that that's not how the economy responds. But again, going back to what you said, making offers. I can't tell you how many times in the last 3-4 months that I've submitted an offer, or anybody in our office that are submitting offers, not going anywhere, keeping your finger on the pulse, circling back in a day or two, then not working out, and you're just constantly revisiting it. And eventually, most of the time in this market, you're going to get your way. Most of the time. Right, it really depends on your client's goals, but I couldn't agree with that more. So, but Adam, ready when you are, we can jump into some deals here and highlight some bricks and mortar. Sounds good?
Yeah, let's jump into it, man. That's what we're all waiting for here is more deals.
So again, guys, just a quick flash here. If you're a buyer, get out there, plain and simple. Again, we started this a few months back. Ultra important. Last month we did. Just because we went on a little three-month hiatus there, and we showed you guys, kind of like a broader scope. This one is just, simply year over year for August. You can see 1 bedrooms are down, 6%. 2 bedrooms are down 5%. 3 bedrooms are up a smidge. And I mentioned this in last month's episode. To me, this makes a whole lot of sense. I can't tell you the amount of, even going through something right now with a client of ours that owns a 12-unit building here in Hamilton, and we represent all his leasing as he's stabilizing the asset. And we just got an application for a 2-bed unit. Mind you, they're a good size, about 750 square feet. But we've got an application with 5 applicants on it, right? Like this is something that we're seeing a tremendous amount. There's a bit of a shift there where these larger leases are becoming a little bit more important. That's year over year. Let's shift to the last month. And again, these trends are pulled from Zumper, which is a huge platform. Bedrooms up 3%, 2 beds down 3, no change in the 3 bedrooms, but the 4 bedrooms, which to me just screams single family. Again, boots on the ground. Don't mean to sound like redundant, but when we see it and physically experience it, it's the best way we can deliver information to the viewers. And we are seeing a lot of people, again, fusing. It's 2 sets of couples. It's family coming together. It's this multi-generational outlook, but on the leasing side. So they've gone up considerably. And to me, studios are just, kind of the ugly cousin at the bottom of the list. But in Hamilton, studios, you're still yielding $1,200 to $1,400. Like it's crazy, right? Depending on the finishes and obviously the area. Same old there. But again, all things considered, no major movements downwards. But again, just like with the resale market, the rental market's got to follow. But overall, I feel like it's really kept strong and consistent here in Hamilton, and to better help an investor's cash flow position.
I just want to highlight right now, I think a really important piece. Like you can get lost kind of staring at these numbers, but think about this from you at home right now. You're looking at these numbers and you're thinking, wow, those are a lot of big changes on some of those numbers. And I think that's a little distracting from what's really important here from an investing strategy perspective. Look at the marginal utility of how much you benefit from adding a bedroom. You add about $500 of revenue from a studio to a 1-bed. You add about another $400 or $500 to go up to a 2-bed. From that studio again, right? So we're about $1,000 more now. Then you still add another $400 or $500 if you can get 1 more bed into that unit. And then you see that big kind of drop off where the marginal utility of going to a 4-bed is way less. And so I think that is a really interesting insight. If you're considering buying in this market right now, you're considering, well, all these properties are sitting on the market. Prices are down, interest rates are down at the same time, which is crazy for the time being. Inventory's sitting, right? And days on market is really quite high. And so when you look at this and you're looking at all this inventory, if I was in your position, I'd be looking at everything that had 3 bedrooms and I would be making all the offers on those, because just look at how much marginal utility you gain by having those extra bedrooms compared to the lowest rung at the studio. And it's just like, man, if you can add a bedroom even to a 2-bed, if you see a 2-bed where you could add a third, think of all the value you've just added by putting a wall in and a closet, right? Maybe a couple outlets. So it's like, and maybe some lighting, to be fair. But like, you know, the additional cost is nothing compared to the additional rent that you receive over a long period of time. So I just wanted to highlight that really quickly, because there's actually a lot of insight on this little chart here. So thanks, Abdellah.
No, 100%. I have a great obviously great breakdown of it. You know, and you and I have chatted about, you know, thinking outside the box in past episodes about, you know, making a unit as highly effective as possible, right? But again, getting the proper advice, you know, not trying to jam, you know, what do they say, a square peg into a round hole type thing, where you know, people are just right, especially with the conversions where you do have minimum square footages for primary, secondary bedrooms. But absolutely excellent point, right? And utilizing the space at its highest and best use, and therefore, you know, really making a huge impact on your NOI and your cash flow position. So, no, appreciate the insight there, Adam. That's awesome. And now jumping into the bricks and mortar, guys. Maybe that's what we'll call this session, bricks and mortar.
Let's go.
But yeah, this one we just took on for a long time investor client of ours. Just wanted to highlight, and for the viewers out there, you know, the last little while, and especially the last episode, and shifting towards these higher densities on the residential side, where, you know, the prices have caught up a bit to the unit count. We're trying to deliver, again, we work in the commercial space, you know, at a high level as well. It's just the 3 to 4 unit kind of sector. So a ton of opportunity out there, especially in Hamilton. You guys have heard me talk about how easy it is, you know, with the lack of red tape we see in the city now. But again, just shifting the focus. Of course, duplexes will, maybe not, of course, but I think to a degree they'll shift back into a decent cash flow or a fairly effective cash flow position. But so this one's located centrally in downtown Hamilton. It's got a great suite mix. So this one, including the basement, is almost 3,600 square feet. It's a giant footprint. The first unit is a main floor basement split. You can see there's 3-bed, 2-bath. We have a 2-bed on the main and a 1-bed, right? So that's another thing, is for longevity of an asset, right, is the unit mix. Unit mix is very important. Going back again to adding bedrooms, right, and utilizing the space at its highest level. And, you know, the owners way back obviously did that here. 2 out of the 3 units are a value add. You know, we ran numbers. We're confident in a 25% rental upside on those units, and giving you a 7% cap rate stabilized, you know, even though, you know, cap rates on the end all to be all, but I feel like I've had to use those metrics just to get a sense of where that value should be, because data has been lacking for so long. You know, I feel, you know, we're priced accordingly with where this asset can go. But again, great upside, 2 out of the 3 units, in-suite laundry. It's got parking out front, separate meters, really stable fire escape in the rear. So multiple egresses for all units. So it's got a lot going for it from an infrastructure standpoint as well. So of course, reach out to us. You know, something that we preach is the triplex house hack, right? Leave the duplex to the side. Now you've got 2 units coming in, right? So we're actually going to talk about that in the next slide or two, but an opportunity that we've got going on. This one is currently off market, still working on isolating a price, but very similar to the slide before. Big footprint, all brick, centrally located downtown. Both of them have zoning for up to legal 4 units, and in the R1A sector. So you've got a 3-bed here, a 1-bed, and a bachelor. Again, a unit mix, and about a 24% rental upside, right? So again, keep in mind, again, maybe going the other way a bit, is we're trying to bring more value adds, right? The value add space to me is where you can, you know, we all know this, you can control the outcome. You know, we do still bring some turnkey opportunity, just like our next slide. But again, this is a great way to go in, even with Sherman, light cosmetics. You're not ripping down walls. You're not going to the studs. These are light cosmetics, new bathrooms, new kitchens, new flooring, paint, rent, you know, it's skyrocketing 24-25%. And now you've stabilized the asset by maybe spending 25-30 grand per unit. It's a solid trade-off there, in my opinion. Again, this one we've improved the price a little bit on it. This is purely turnkey, 3 1-beds, 2 parking, separate hydrometers. Why I like this one so much is if you look at the picture, that building next door as well presents another 3 units, value add. So 6 units total here, 4 car parking, 6 hydrometers, the roof's in great shape, new furnaces. It's outstanding. It's in core town, very trendy area, really close to the hustle and bustle of James Street North here in Hamilton. So just a very unique situation as well. So these are side by side. And for those of you who know about the Planning Act, these can never merge. So they were severed when we did our due diligence. They were severed sometime in the 70s, where there was some provision that allowed them never to merge. So again, just a bit of an upside there as well. 6 unit upside here as opposed to a value add. For up to 3 units like Fairley and Sherman. And now a bit of a different kind of take on what we usually discuss on this channel. We've definitely seen some feedback from, I'll say, mostly experienced investors, if not all, who are, again, just, maybe have some infill projects on hold or some larger repositions that they're going through and have some cash. And now instead of just, kind of committing more to the bricks and mortar, they're shifting their focus to high-yielding businesses. So this one's been in operation under that brand for about 25 years. The current owners operated for about 15. I personally go to this location. It's in a incredibly busy plaza, again, on the West Mountain. The lease is in place, so no worries there until May of 2028. It's about $4,000, including TMI, so a gross lease there. Nothing to worry about except the rate. High-end equipment there, high resale value on it. Everything's very well kept. So and you can see the net income there of 150 to 190 since about 2021, and just with the fluctuation that we saw through COVID across the board with small businesses, but has held really strong, and it's a large presence. I don't think I ever walk into this dry cleaner and don't see a million hangers going at once. So again, something a little different, but it only comes because of our dealings with investors and what their goals are. And primarily, we're just here to support it and just another piece of the pie that we can speak to.
Yeah. And you know what, Abdellah, I love you bringing this up because way back, maybe 2019, 2020, Matt and I actually did a huge campaign in London where we leveraged the system I was using to flyer London for off-market properties. But we actually switched our call to action and our offer to businesses. And we were really interested in this because of all the uncertainty that was going on in the market in 2020. Exactly. Like people were panicking, right? And obviously, you never waste a good calamity. So we were like, okay, this is really interesting. Like, let's see who we can just have conversations with. And that sounds a little predatory, but it's really not. The idea of investing is you really have to buy low, or you have to buy somewhere where there's opportunity to add strategic value. And when the market has uncertainty, some people, they just want to pull out and get out, right? And what's really cool about this is, so first of all, we sent flyers to literally every single business in London, right? Like every business. And we got a bunch of calls and it was really cool. We never ended up buying anything because a lot of people, it seemed like we're still off on their valuation. But what's really interesting about this opportunity is this business survived COVID. Right. And so now you have a lot more certainty as a buyer that this business has a really, really, really good chance of carrying on, because something that's lasted 25 years. I mean, that's like, go look at the Toronto Stock Exchange and tell me how many companies have lasted 25 years. It's very few. It's very, very, very few. So I like this opportunity. The ask price is honestly not bad at all, right? It's like a 3 EBITDA and change maybe. And that's not bad at all, because you get all that equipment, you get a business that's already established, it's got a great brand. You can see just on this one photo that if you just went in there and did like $10,000 of sprucing it up, it would look like a totally different place. And you could carry on that business in for the next 25 years. That to me is really exciting. I do think that like now is a great time to be focused on real estate investments, but this is a great time as well. Like any business that survived COVID, fantastic. My business didn't, and we had sold $300 million of real estate. right? And we were like, the conditions didn't work out and they changed a couple rules. So when I look at any business, I'm like 25 years, that is a drive, man. That's a hard driving business. And they've got great customers that are going to keep coming back. Anybody that's used a dry cleaner, you've never used another dry cleaner. I promise you, it's like a barber, right? You only go to one barber for as long as you can, right? Until they move or something happens. Like a dry cleaner is a sacred thing that you return to every single time to trust with your suits and your high quality garments. Like that's what I do. I've never switched a dry cleaner ever. I love that concept in that business. It's like a tattoo artist, like a barber, you keep going back. Like a realtor, hey, you go back to the same one because you know them, you like them, you trust them.
So, yeah. And the other, some great points there, Adam, for sure. And this business has survived the test of time. And I can speak to it on a personal level. The other item that I should mention is there's a VTB option here with about 50% loan to value. Mind you, it's at 0% for 3 years. So
dang,
right. So it's a religious thing there with the owner. Obviously, can be super, super advantageous. Obviously willing to stay on and train and do all those normal things that one has to do when handing off a business. So going back to your points, right? You stick to the vendors, you stick to your team, not so much the power team we use in real estate, but right in your life. And to me, it's the same. It really is the same. It's just on the personal side versus the business. And I've been going to this dry cleaner since forever. And again, I just feel like it's not directly real estate investing, but it's investing. We're going to try to bring the opportunities that we feel can be advantageous to the viewers and the network.
Yeah. And just think about the context of that, right? So if he's bringing in 150 to 190, let's just stay on the low end of that just for fun. At 150 grand, right? If he's offering 50% loan to value, that's 275 grand, right? So you got to come up with 275 grand cold hard cash, right? So what you'll do is you'll go get a business loan based on the financials of the company. So all of a sudden you're borrowing that portion of money at a rate for sure, maybe 5, 6, 7%. Doesn't really matter, because if you continue to maintain his low end of profit or net income, you're going to end up paying this entire thing off in a few years of the cash that you put in, right? Or you can clear his loan out and then you just have your loan. So it's like 3 to 6 years, plus ideally you'll improve the business and get back up to his high end. Within like literally 6 years or less, you just have a cash flowing business that's printing you, 150 to 200 grand a year. Honestly, like just tell me where else you really do that, because you don't. Like in the best years of real estate, you maybe gained $200,000 of equity, but you put up a ton of cash to do that. And you probably put up with a lot of LTV concerns, and you put up with a lot of investment into that building, right? So you added a bunch of strategic value, you added units, you turned over tenants, you completely rehabbed the building itself. So it's a ton of work. And something like this, you can have running in parallel to your real estate investments. Right? Like ideally what you would do is you would use your real estate investments to fund the loan that you take out on this, so that it's just feeding itself, right? And that thing's getting paid down quickly. You're also getting your mortgage pay down. Like all these things, like there's nothing wrong with diversifying your income strategies. So I love this.
Yeah, no, man, it's some great points there, Adam. Obviously you've got some genuine experience in the field. Yeah, I just think it's an opportunity. It's a feeder. The labor there is not extraordinary. I mean, the family operated most of it with some part-time people, and if you replaced that labor force, the numbers still work out great. And I know those that net income will gradually climb back up to where it was pre-COVID. So it can be very hands-off, right? And the last point I would want to make about this is the biggest problem I see with businesses, especially when you're in the dry cleaning, laundromat businesses, is the cash component, where this one handles such a small portion of cash. So the financials are strong. They're able to be leveraged by your BDCs or any sort of BDM out there that you're looking to borrow from. So that's the other upside too, right? We sold a car wash earlier this year. Took us 245 days. One of the greatest commercial experiences of my life. Learned a whole hell of a lot about logging, tracking, regardless if the cash is coming in, right? But just kind of a point I wanted to highlight there, that it's run very, very well.
it's really great. Like the cachet that a 25-year existing business brings when you try and go get a loan on something like that's going to be meaningful, right? Because you're going to have years and years and years of financials that prove that this business is stable. You didn't just start, you're not starting a new business, right? You're not jumping in. Like this guy's going to help you transition. And I mean, honestly, replacing his labor and the family's labor, I don't know for a fact, but I assume this is like a $20 to $25 an hour type of job to have somebody in there every day putting the clothes through the process. So it's just a small training cost to get them up on it. Maybe you have 2 employees that do it and you just run with it. Like it's so easy.
Or absorbing the current part-time workers there. So again, yeah, I think great opportunity, great points on your end as always, Adam. So here's our last one here. I thought that was our last one, but this one is we just put under contract. So tune in next month to see what the outlook looks like for this project. So it's almost 1,700 square feet. It's got that holy grail zoning R1A up to 4 legal units. You see the projected rents there with some light cosmetics. Not an incredible amount to do here in terms of the actual conversion process through permit. This one is in a, still an up and coming neighborhood. I would say C+, B- type of neighborhood, but you can see it's all brick, great infrastructure, parking spot in the front, 2 more in the back off the laneways, which eliminates a lot of hassle, especially, with parking on the parking requirement side and avoiding minor variances. So we're getting this one vacant as well. So again, tune in next month to see how this all worked out, but super excited about this one for our house hacking client. Always want to shout out our preferred vendors here, especially our sister company, 555 Construction Management, Inc., who make my life very easy this day and age, and being able to hand off clients to a team that speaks the investment game at such a high level. With our partners at Deck Inc. on the planning side, who always do a bang up job, property management, and our friends over at Synergy Mortgage Group, who are investors themselves. And I just can't speak highly enough about our power team and how incredible it is just to trust others and leverage my time where I can focus more on finding the deals and do what I do at a high level, and that's on the acquisition side. So that's it for me, Adam.
Hey, that's wicked, man. Thank you so much for coming on again. You always bring the value, always bring some deals for us, and we love that here on the channel. Again, this is a channel built on real people doing real things, and that's what we got here with Abdellah. Another little treat, if you stayed on right to the end here, is in a few weeks, I'm flying back to Canada, and I'm going to go and shoot a bunch of videos in person with 555 Construction. And I think they're going to absolutely blow your mind, because like by the time you're watching this video, we're probably filming within the next 2 weeks from it. And we're going to have a lot of content coming out about additional dwelling units, about projects that are ongoing, hopefully some construction tips and tricks. We have a ton of valuable content coming your way. So if you're looking to learn, that's where it's going to be. So stay tuned for next month's market update. I think that'll come out before the 555 construction videos. And we'll be able to update you on what actually happened in September. And then we're going to be in October filming all these great videos for you guys at home. So thank you so much, Abdellah, for coming on. Thank you for bringing the deals. And thank you for bringing us a business, dude. I love that. I'm absolutely always down if you have other businesses you want to talk about. It's a passion of mine. So I'm really interested in that. Congrats on the sale of that car wash, by the way.
Yeah, appreciate it. That was it was a doozy, but it'll put hair on the chest for sure.
Yeah. I love it. Well, that's what we're here for. We're gaining experience, right? And again, that's part of the real people thing, right? We have to learn ourselves. And once we learn, we practice, we get better, we become professionals at it, and then we can help you guys do it better. So that's where we're at. We'll see you guys back here next month. If you haven't already subscribed, smash it right now so that you can get the notification for that next video. Bye.